Great. Well, welcome everyone. Happy Wednesday. We are excited to be talking with y'all about essentials for marine industry startups today. And thanks everyone and to our speakers who we'll introduce shortly for coming and spending some time with us to get us up to speed on just that. So Nagar, we can move on to the next slide, please. Awesome. So just to go over our agenda very briefly, kind of introduce our panel audience today, a little bit of an overview about the SBIR kind of application process and the kind of overview purpose of that series of grants. We're going to talk about market trends and industry dynamics in the marine economy. We're going to talk about market validation and how your kind of product and product services, whatever you're putting out there in the world today, kind of meets the need that's various needs are in the marine industry. And then we're going to close it talking about financing and have space for Q&A before the hour is out. So we can jump over to the next slide. So my name's Ryan Dunphy. I'm an engagement manager here at ADL Ventures. We're focused on developing and launching clean infrastructure innovations in the US. I'm here with my colleague, Eric, and also a colleague from my former internship at Sea Ahead, Haley, who's joining us. They're a venture VC firm and big facilitator of the blue economy startup ecosystem with a lot of different perspectives, both operationally and financially. That's really exciting to have them on the call. And Samir from Lyman Morris, who has really awesome experience in product development and prototyping in the marine industry, as well as for kind of an expanded group of sectors. So we're going to be talking with Samir about some of the product side of the equation here today. We can bump over to the next slide. So just to kind of rehash the three phases of the SBIR grant, I'm sure some of you are in various stages of familiarity, maybe even mid-application for the SBIR grant, and wanted to kind of make sure we understand what are the different phases, kind of what's the process, what are the major goals of each of these phases as you're both seeking the award and then seeking to execute on the award if you're lucky enough to win one of these. So typically these start, you need to start in phase one, where you're really kind of establishing your basic technical merit, kind of feasibility of your solution. And, as the theme, we'll talk about the commercial potential of your kind of proposed innovation. And this is really, maybe if you're starting as a very engineering heavy team, this is probably where you're going to be using that skill set most in depth, really working on the technical side of the application, but also starting to think through this whole process about who's the customers, where in the market is this going to end up, and what effect is it going to have. You're going to be judged kind of quality performance of that first phase one before you're kind of eligible to apply for phase two. Although I'll note at the bottom, there are some fast track applications that allow you to apply for both stages simultaneously. But this is typically for folks who've had some maybe greater demonstrated experience, capabilities, and knowledge, and can cover both awards through one application. So definitely for folks who are maybe younger to the game, typically you're starting kind of each segment one at a time. But phase two, you're kind of continuing the R&D efforts that you've kind of initiated phase one, but typically you're kind of targeting a pilot or demonstration project by the end of this phase. So getting that product into the wild, doing some real world testing with it, demonstrating the capability of the product in real environments. And then phase three is really all about ensuring the commercial success of your innovation. So by the end of that phase three, you should be able to be selling your innovation on the market, getting customers. And this phase is really thinking about, who's customer one, who's customer two. We'll talk about the balance of product design between these different phases and how you're thinking long-term about the design of your product, and particularly for keeping manufacturing necessities in mind as much as customer requirements. So we'll kind of get more in detail on that. I think we can pop over to the next slide. Wonderful. Yeah. And I think for each of these applications, I think you're going to be talking about, your commercialization capabilities, who's your current or potential customers. So you may be working on getting, letters of intent from folks who maybe haven't signed up to buy something from you, but they're interested in committing to exploring the potential relationship of being a customer. Those are important to start thinking about. Doing great market analysis and understanding what the competitive landscape looks like for your product or your service, and then really thinking about, where do we start in this market? Who's our first customer, and what's that maybe small niche that we're going to satisfy? And then, what's our fundraising and scale up? And then need to start thinking about, some actual revenue forecasting. So the phase one application you see here is very, very short. So you're going to get good at really summarizing this very succinctly. But that's definitely a challenge we work on every day, is getting the right technical details across in a very kind of succinct way that folks who are typically, these reviewers are time limited. Maybe it's a colleague of someone on the technical team who may not be an expert at your technology. So you really need to be able to communicate what you're doing in a very kind of digestible manner. So I think that's good on SBIR. I think we can click on. So we're going to talk a bit about market trends and industry dynamics. So we can pop over to the next slide here. Great infographic. So Haley, I'm going to play you in here in a second. So oceans are getting busier, lots of opportunity and kind of greater pressure on the ecosystems as a whole. So you're seeing the aquaculture production is going up. We're exploring for hydrocarbons, minerals, and obviously, with some of the EV batteries and new exploration there, but lots more kind of activity happening in the oceans, and interest in this kind of both economically and for environmental reasons. And Haley, I don't know if you're looking at all these flying graphs, what you see here, or any comments you want to make.
Yeah, thank you, Ryan. And I would say that, these graphs are super helpful. I would say that also it's really important when you're thinking about how your technology might apply to some of these markets, is to think about the political and policy aspect of things as well, like top down, where are things coming from in terms of large pieces of legislation and what they're prioritizing. So we see a lot around coastal and climate resiliency across the board. And obviously, we're seeing a lot around renewables and those goals that are being set around renewables. So the technology that you're developing should have applications to these big markets, right? And so that's something that, in terms of trends, like if we're thinking about renewables, anything that is a technology that could have a horizontal or direct application to enabling offshore wind development and or grid security and or biodiversity, and the hydrogen and carbon markets, like those are really hot markets, but they're coming from the top down from policy perspective. So I think it's really important to have that broader perspective, and that way you also have a little bit of a lens into the the oracle of where these things are coming and when they're coming. A lot of that is tied to where the dollars are flowing. I would also say that, like, big industry like shipping, a lot of these industries are being forced to adapt because of policy. And so it's really important for you guys to pay attention to when those things are coming online and those pieces of legislation from the perspective of those are industries that have to change no matter what, which means that it's going to create a market for you that's going to be more viable and you're going to have to do less convincing.
Awesome. Great perspective. Thanks so much for that comment. We can pop over to the next slide, Ngara. And this is also a great comment for you, Haley. I'd love to get a sense, I think climate tech investment may have peaked kind of a little bit a year or two ago. Interest rates are higher, so startup investment's a little tougher than it was a couple of years ago. But we know that defense is up, the blue economy investments are growing, and I'm curious kind of your comment on the investment landscape out there.
Yeah, sure. And I'm sure Samir could say more about this as well, but it's still easier to get software funded than hardware. It's a longer road to getting that hardware not only developed, especially in a marine environment. It's expensive, right? I'm sure everybody in this call actually knows that, if you're in that aspect of the field here. but it's still easier to get software funded than hardware. I would say that, again, this is like around horizontal applications, because even if you think that you're doing climate, you're probably also doing blue. So just think about the translational nature of that. And it's less about like, oh man, the market's peaked and I was in that bubble. Just recreate your market, right? But what we're seeing across the board in terms of like trends of investment for where you guys are going to be at if you're thinking about applying for an SBIR, even phase 2, but 1 and 2 is like, non-dilutive capital is the way to go at this point. You really don't need to take on money that you need to respond to and have an ROI attached to when you're at that stage. So it's really great to look for non-dilutive sources of capital. SBIR, other types of government funding are excellent. Also, philanthropic dollars are really great at this stage of development. And making that case again for how you're helping these markets transition will help you to position yourself well. But those are some of the trends we're seeing across the board.
Awesome. Yeah, and we'll have a slide towards the end on kind of the life cycle of investment sources, and I definitely want to come back to the point you just made. Anything, Samira, you want to comment on just hardware investments or anything like that, or?
Not particularly. I think we're definitely seeing a lot of growth on the defense side. We're seeing a lot of flexibility as well from defense as they want to move towards more treatable technologies faster. There's a bunch of forums and companies out there like SoftWorks, DefenseWorks that can really help with innovation and startup. And I would urge people to reach out to those, keeping in mind, there's a lot more compliance and flow downs every single day as well. So
awesome. Thanks, Samir. Well, we can pop over to the next slide, Vigara. So I think the marine sector, there's lots within this, and I think I'll invite you both in to comment on this, but it's also important to think, as you're thinking about your individual slice of this market, what are the kind of overall dynamics? What's the big kind of macro trends that are affecting movement in the industry? So we're talking about, major customer focuses. So we know, COVID, there's massive disruption in supply chains and still so much, cargo, raw materials, commodities move over the seas. So lots of focus on how do you make the supply chains more flexible, agile, and reliable. So I think there's a lot of changing dynamics in the supply chain and logistics and shipping space that's happening. Obviously, as we talked about in the past 2 slides, lots of interest both from financial opportunity as well as legislation coming, from all kinds of different countries in EU, pushing organizations to have more sustainable operations. And then there's, perhaps a more obvious effort for digitization of information, given that these are, often complex international organizations. I think from a structural side, what's interesting is that a lot of the major kind of organizations in the maritime space are still family owned. So they're not kind of the Amazon, Google, the ownership dynamics are definitely distinct from some of the FANG companies and other companies you might be used to. And there's talent shortages all over the world in a lot of industries. But I think what's interesting about marine sector is there's particular qualifications that staff need to meet, need to have very particular certs or skill sets to be able to work in that sector. So that's kind of a structural consideration. I don't know, Haley, Samir, do you have any other comments, kind of overall industry dynamics here?
I'll just reiterate some of the points that I was making earlier around,
Sure.
And that you just said too, Ryan, around the pieces of legislation that we see coming down. I mean, recently we've seen the largest federal investment in climate that's ever happened, right? So it's significant. You can see that there's definitely a focus on forcing us all to adapt to something that is a harsh reality. But that is not to say that everybody hasn't been already working in these fields for so long. It's just officially getting, federal recognition and federal dollars flowing there. But I would also say that the renewables market outside of shipping, the renewables market is where things are really, really hot. And we've all seen, again, to your point around supply chain, there's so much innovation that can happen in the white space in between these things, right? Around supply chain security, but the logistics of it and standardization across developing these new types of wind turbines, et cetera, et cetera. There's some really interesting niches to dig into there that could broaden your technology's application in a way that folks aren't thinking about now. So I would just say, like, be aware of those other things and finding that white space.
Awesome. Thank you. Cool. I think we can go to the next slide, and I think Eric, you can take over here.
Great, thanks, Ryan. Yeah, so in the following sections, I'll be jumping into market validation and how to think about that when it comes to considerations for your go-to-market efforts. And then we'll jump into a little later in some of these slides around product, thinking about your product, especially as it pertains to your go-to-market strategy. Next slide. So I think when my colleagues at ADL think about the basics of market validation, especially when considering the marine industry, I think it's really important that we're considering three big areas. One is, how do you get that commercial traction? So considerations for getting your first customer, what does it mean to acquire that first customer, and also getting past that first customer. I think a lot of the early stage ventures that we would be looking at in this kind of marine energy, marine space, are selling enterprise. They might also be software enabled, but again, you're not looking at kind of mass adoption through like B2C type of business models. The other area that we really like to focus on is like spending a lot of time and thinking carefully about understanding your market opportunity. In the marine space, it's obviously very large. You can frame it very large in a very large way, but there are also very specific niche markets which need to be considered, and think about how those each relate to one another. And I'll talk a little bit about that some more in this presentation. And then the third section, as I mentioned, really is around product design, prototyping, and balancing that need between design requests and your manufacturing needs. That becomes especially important with your first customer and first couple of customers, and thinking about how you scale. So next slide. Oh, yeah, great. So when we think about that first section about getting commercial traction, there are several kind of important points to consider. One is how you think about your first customer and say that pilot policy. We tend to suggest that you think about that in a way where you're not giving something free away to your first customer, that you're thinking like really at the start about those commercial terms. What is that customer going to be giving to you, and what are you going to be giving to them? And so it's really important to delineate those commercial terms and make sure that the conversation is around what is that first customer going to buy. It's a very different conversation when you're talking about giving something, away for free. And we've seen startups try to do that, and they tend to kind of get into some tough territory there, especially later on in those relationships. As you're thinking about that first customer, it's also important to think about how to maintain that product market fit as you're moving from that first customer on to the following customers. There can be a tendency to do a lot of customizations for that first customer. And so you really want to balance that with how you're going to scale and go to your next customers, because you can get easily distracted with those first customers. Some other points around kind of how you think about legacy industry engagement, and thinking about what are the risks that your first customers are going to perceive, and how do you manage those risks, and how do you sell into those risks? So things around like reliability, security, safety are going to be important. And when you're a startup, your first customers are also going to be thinking about your financial stability as an early stage company. And so making sure you think about that and address those upfront or in those early conversations with those customers will be helpful, and they'll be looking for answers to those questions. When you're thinking about targeting your government clients, which I think for a lot of folks on this call are probably going to be, it will be pretty important. You're going to really want to focus on identifying the champions and also leveraging subsidies or any incentives that you might see in the market that you can use to your benefit. And that will be really important. I think stakeholder engagement, especially as it pertains to the government or as it pertains to kind of large, complicated customers with a lot of stakeholders from the organization, is something that you're going to want to think carefully about. Next slide. So on this slide, there are a few examples of kind of government entities to consider, but there are many other ones. So just a few calls. So for instance, you have the Energy Trust of Oregon, for instance, for those on the West Coast. They seem to have some great programs around project development processes. They can support feasibility studies, support things around final design and permitting, and any kind of issues around utility interconnection. So again, looking for entities that can provide an ecosystem of support, especially coming out of the government, are probably going to be great folks to work with. And in our experience, identifying those and reaching out to them, they tend to be pretty open to wanting to have those first conversations and see where they go. Here on the East Coast, where I'm located, so entities like Mass CEC can be a great resource. These quasi-government organizations, they'll usually have some sort of programs in place. I think right now Mass CEC had the hydropower program, and I believe they're considering reopening it for those who are looking at kind of hydropower. So that might be something to take a look at. And then, national organizations or industry organizations like the National Hydropower Association can be a great resource for folks to stay up to date with hydro-related grant opportunities across the U.S. and within states. Again, lots of organizations out there who want to help. Most of them are very receptive, and so I definitely would encourage people to reach out to them, even if you don't know people there. Next slide. Great. So when we think about understanding the market opportunity, there's two kind of big points to consider, especially when they're in the marine space. So you want to think about it in relation to your specific technology or segment, and you want to think about it in terms of how long is it going to take for you to mature your technology or product, at scale, and to kind of take advantage of the entire opportunity. So when you're thinking about it for a specific technology or segment, each segment will most likely have its own market dynamics. And I'm sure folks like Haley could talk about what they have seen with some of the market dynamics in some of the smaller segments of the kind of ocean or blue economy. But that's going to be a really important consideration. You're going to want to think about, as you kind of dive into your segment within the blue economy, is it large enough to be venture backed, and what is it right sizing that financing look like? There are examples of companies that I think went to the market thinking, selling this kind of, big, blue economy market opportunity, but I don't know if they had quite right sized their actual customer base and willingness to pay. So that's going to be something to really think about. There are great business models all around. It's just making sure you get it right, especially if you're going after venture financing or different type of financing. And as Haley mentioned, non-dilutive financing, I think for a lot of these cases is definitely something to consider pretty significantly. When it comes to also thinking about the technology or segment you're looking at, again, look for those incentives or kind of legislative changes that could change the rules of the game for your segment. That's really important, so try to stay ahead of that. Again, folks in the government tend to be pretty easy to reach out to and want to talk to you about their different pet projects and what they're working on, and especially on the policy side, so that can be a helpful resource. When you're thinking about kind of your time horizon, different segments might have different conditions for how quickly you can scale within them. So that's something to think about. Like most of these technologies that you're probably bringing to market, is going to be a pretty iterative development process, and thinking about what that development process looks like and aligning that to the financing is going to be important. And then the other part here is, identifying first customers and partners who are not only probably going to pay you, but can be champions. And so a great example, I think, is Naviair. They are building vessels, electric foil vessels, to enable a new form of waterborne transportation. And they found a great partner, for instance, with Stripe. Stripe is not a company operating necessarily in the marine space. They're a payment company, but they have a very interesting stance on how they think about kind of the future of renewable energy and where they want to invest money and their efforts. So definitely finding maybe kind of non-traditional champions who can kind of either act as a customer or bridge your way to a customer can be great. So next slide. Great. So when my partners and I think about product design and prototyping, especially when considering kind of deep tech or hardware, it's obviously different than when you're thinking about software. But there's certain principles that apply to both. But it's also, especially when you're thinking about that first customer, balancing design requests and especially your manufacturing needs as you scale. And so there's kind of, let's say, 3 topics to consider here. One is when you're thinking about the kind of cost to design and thinking about how your solution is going to be implemented and deployed at scale, even from the very beginning. So you really want to take time to understand that connection between product design and costs. Try your best to model out those costs and identify your assumptions. It's not going to be perfect, but pressure testing that model will be important, and making decisions early on that will lead to higher margins if possible, and thinking about what that means to have higher margins, or like what are the dials you can dial in on, what your margins will look like in terms of the business model will be important. Thinking about how you can lower costs later on the process, even very early on. And these will be kind of important things to think about, at least to consider when you're thinking about even your early stage development. So Samir, question for you: when you're working with your customers and you want to think about the changes they go through in those prototypes, how do you think about those changes, with perhaps a prototype, versus thinking about the impact of manufacturing your solution at scale?
Yeah, I mean, I think that's a very fine point you've touched on. I mean, that design spiral is endless as you go into your product, and you really need to use whatever resources are available to you these days, be it CAD, 3D printing, simulation software, FEA, to kind of hone that in as best as you can. I mean, you're going to have challenges with deciding when to do permanent tooling for manufacturing. You want to, work with suppliers, vendors, subject matter experts to really help you shape those decisions, and just recognize that there's a lot out there which can help you with that first step, so you don't have to go to production tooling right off the bat.
Some of the things that we've seen be helpful are things like design freeze dates, thinking about cost targets. Are those areas that you've also seen helpful when working on prototypes and going to scale?
Well, in some cases, yeah. I mean, there's cost targets are challenging when you're working on things like Department of Defense stuff, or custom one-offs. It is hard, but it's good to situate those early on in the project. I think Ryan mentioned, a lot of the stuff in the marine space does have requirements around ABYC for systems, or looking at Lloyd's registers for the different certificates you need to have. Coast Guard stuff always comes into the picture. You need to be aware of all the compliance around those things. Simple examples, Coast Guard's going to require you to have fire-resistant resins, whereas if it's a pleasure vessel, you don't have to worry about that. So, you really want to talk to subject matter experts as much as you can and dial those things in.
That's great. Thanks, Samir. So let's jump to the next slide, slide 16. Great. So, and I think this has been touched on a little bit, but the big area, I think, especially when thinking about this whole space of market validation, is thinking about the risks and regulations, and reliability tends to be a huge requirement in marine applications. Here we've kind of illustrated a little bit of a chart here to think about the different factors that you might have when considering the risks and regulations. It's done from structural, mechanical, electrical, and control systems. And you're operating obviously in harsh environments, when you're operating in the water, whether it's in oceans, lakes, or anything, and those environments can be difficult and different. And again, it just comes back to really thinking about what is the what is your customer or first customer trying to optimize, and also what are the other customers down the line going to be trying to optimize as well? Most likely there'll be big overlap there, but one of the things I think that's important is when you are having that conversation and getting deep with your first customer, start also to have those conversations with your second and third and fourth customers to see if there's any differences with how they need to think about things, and you can kind of establish any general patterns there. They might be thinking about the regulatory environment similarly or in different ways, also depending upon if they're in the US or they're in the international space as well. So I will turn it over to the next slide so we can chat about financing.
Awesome. Thanks, Eric. Yeah, so I want to talk about, I know we talked a little bit about the investment landscape, but wanted to talk a little bit about, how are you thinking about, investment vehicles that are going to support the growth of your technology and your team. So we can pop over to the next slide here, Nagara. So kind of everything here is about, how do you get to a stage where you can access debt financing? So you're out of, angels, VC, all these folks, and you're able to kind of get your commercial debt. And obviously that's challenging because a lot of this kind of timeline is before you really either have commercial traction or before you have enough commercial traction to support the business. So we are big believers here at ADL Ventures on non-dilutive funding for startups. So I know there's a lot of interest in kind of assumption in the startup community that, I got a startup, I got to go straight to venture capital and get my investment there. I think the change in the funding environment has changed some of those assumptions, but we also have just generally felt like there's a lot of opportunity to get non-dilutive funding in the form of, federal, state, local grant money, private foundation money that might be mission aligned with the technology or the market that you're trying to affect. And also, there's more creative things like crowdfunding. I think we preferably are trying to see if it's not those kind of early group of funds that I mentioned, are customers able to fund your growth, and thinking about how to get to agreements or into commercial relationships that allow your customers to kind of maybe pre-order some products from you so that you can fund investment in tooling or a factory or something like that. So Haley, I was hoping you could add some color here. I think, we both feel strongly about not rushing to VC money, and I'm curious, there's lots of different vehicles on this graph here that fund different stages of growth, and I don't know kind of how, maybe you can comment about how you've coached see-ahead startups like through the different funding vehicles that make sense for them at these different stages.
Yeah, sure, Ryan. And I agree with you in respect to definitely looking at federal sources of funding like SBIR programs are excellent for this. I would also say that, in general, it's really good to make sure that you have customers or even a customer that will pay for the thing before you go and take on money where you're promising something, right? So just make sure that you have tested that market, that you have customers that are going to pay for it. And ideally even being able to, do some of these paid pilots that I saw on some of the earlier slides that Eric covered as well. That's best case scenario, right? It doesn't always happen that way, but looking for those opportunities would be really important. I'd say in this really early stage too, we're also seeing a lot of folks doing, safes or convertible notes instead of going out and raising a straight seed round with VC money. Because it's nice, it gives you a nice bridge where you can get that capital in, it's a promise for what's coming in the future, but also you're not beholden to giving that direct ROI that a VC wants to see. So those are some of the things that we advise the folks that are really looking at the stage of an SBIR 1 or 2 to think about.
Awesome. Thank you. We can pop over to the next slide, Nagara. So I think just two kind of quick case studies about really, I think, combinations of funding sources that can kind of keep your innovation going, especially in the early stages. So Sail Drones, interesting company, autonomous kind of sail-powered drones that kind of do a lot of data collection, ocean mapping, weather forecast data, et cetera. And they were actually able to get a private foundation grant from basically the Schmid family from Google, who have kind of their family had kind of a mission interest in ocean conservation and ocean innovation. So again, kind of where can you get some mission alignment with some private foundations? Always some interesting opportunities there. They also got, I know, although Silicon Valley Bank has fallen on hard times, they're still standing and still playing an important role in the startup world. One of the few places that was really offering, debt for new ventures. So they got a variety of different kinds of loans and debt to fund, equipment investments, and other kinds of loans to fund, especially the hardware side of it. I found they had a really cool product in terms of product specs and harsh environments. They had, I think, recorded some video and captured data in the category for hurricanes. So pretty impressive from a product spec standpoint. And then the Nova Scotia example you see in the upper right, this is kind of tidal energy. If you're new to this technology, this at least current form factor is basically an underwater wind turbine, for lack of a better explanation. But they've pieced together an interesting combination of grants and then really relied on a lot of state vehicles for financing. So green banks, and then also knowing that the time horizon is fairly long for commercialization for these things, depending on a price support vehicle that is fairly popular in the EU as well as in Nova Scotia and Canada, which is a feed-in tariff kind of supporting the price of energy produced from these facilities. So I don't know, Haley, any kind of interesting combos of like financing vehicles for see-ahead startup that you've been kind of perked up by, or?
I'm not sure that, well, I mean, other than the other things that we've talked about thus far, but I would say that also I would be remiss if I didn't call out Mass CEC as an example, but there's so many organizations that are funding specifically like on the ground in your locations that are funding for these types of initiatives that could really help you with things you don't think about. Yes, of course, we know we have to fund the hardware development, but like maybe it's staffing that you need. Maybe you need like access to be able to go to a trade show or a conference or things like that. So there's a lot of other types of resources that are around instead of just thinking about like getting money to build the thing. So I'll say that looking into those networks is really important. Including also just to touch on something earlier, which is like the tech hub designations across the country too, which can unlock a whole network of resources and grants and et cetera that you won't have to work so hard to go find because it's all of it's aggregated, right? It's a concentrated place to go look for those things.
And what are the marine sector ones? Is it the one in Rhode Island maybe that you would come to mind? Or,
yeah, definitely the one in Rhode Island, which is an ocean tech hub, right? So it's Rhode Island and southeastern Massachusetts. New Bedford is a part of that as well. And then also, on the other side is Louisiana also received the hydrogen hub designation as well. So there are other resources that you can plug into that, it's the 80-20 principle, right? So like you're getting in and you unlock this resource and then all of a sudden it's like all the people you wanted to talk to in one place.
Awesome. Yeah. So Tech Hubs, for folks that aren't familiar with them, Economic Development Agency project. We're actually, ADL is running a different one in North Carolina around industrialized construction for affordable housing. But again, kind of a convergence of stakeholders in particular sectors that are trying to grow the cluster there. So both the Rhode Island and the Southeast examples are really awesome ones to look up. I don't know, Samir, anything on just, I know we jumped over hardware financing, but things you're kind of mentoring some of your customers through in terms of financing for hardware-based kind of businesses and applications?
Well, I think, to add to what Haley said, these innovation hubs are great resources across the country and can put you in touch with a wide range of prospective financiers. Specifically, if you're in the DoD space, things like DefenseWorks, the Doolittle Institute, IC-Works, SoftWorks, they can really help drive you to places where you'll get a lot of joy.
Awesome, wonderful. Well, I think this might be our last slide, Nagarg. I think we're clicking over to questions. So I know we've got a nice group here. Maybe we can take, allow folks to come off mute and just either, maybe we could just have folks raise a hand if they have a question. Might be a more efficient way to kind of